This sector in crypto is about to explode, and even Goldman Sachs is now involved. Plus, Ethereum is reaching an all-time high level in this one key metric right before the ETH ETF is set to come out. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so no one drops latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice. We wish the best of luck in your crypto ventures. CoinEx is also hosting a new campaign where you can earn up to 40% commissions on transactions, but more on that later. As an Ether ETF moves closer to reality in the United States, the amount of Ether staked is nearing a record high, keeping the circulating volume in check, even though the total amount of ETH is growing again. The total number of staked ETH has continued to increase and sits near its all-time high as it stands at 33.3 million ETH, or 27.7% of the total supply. The increasing supply of the second largest cryptocurrency is a sign it has returned to being an inflationary asset, undermining its capability to act as a store of value over time. There are ways to counter this, such as staking, which locks Ether for a fixed period of time, and burning, or permanently removing from circulation. Data from Coinmetrics, meanwhile, shows that around 12% of Ether supply is being used in smart contracts or bridges that connect between blockchains. Between that amount and the tokens that are staked, roughly 40% of the cryptocurrency is locked and not being actively traded. Tom Dunleavy adds that ETH ETF flows are going to rapidly move this market. The race to launch an Ether ETF appears to be heating up, and polymarket bettors appear to think that it will begin trading before July 26. Recently, Invesco and Galaxy announced they will charge a 0.25% management fee for their proposed spot Ether ETFs, slightly higher than Vanex's 0.2%. But before trading can begin, the SEC must provide feedback on the current applications, and issuers need to file final amendment forms with fee information and other required details. Data aggregator Artemis shows that real-world asset tokens grew nearly 28% on average during the second quarter, outshining other crypto sectors. The tokens tracked by Artemis to get the average are Ondo, Mantra, Clearpool, and Maple. In the same period, Bitcoin and Ethereum slumped 10% and 2% respectively. Although these numbers don't seem out of the ordinary when the volatility of crypto is considered, the average performance of the market in Q2 is negative 34%. The utilities and services sector, which includes tokens like ENS, SAFE, and Anchor, managed to stay above the average market performance with a 17% dip. And now Goldman Sachs is preparing to launch 3 tokenized projects by year-end for major institutional clients. Matthew McDermott, the firm's global head of digital assets, said that tokenization, which is the process of converting real-world assets into digital tokens, presents a critical opportunity for the bank due to the rising client demand for such products. He added there's no point doing it just for the sake of it. The definite feedback is this is something they actually want and will change the nature of how they can invest. Speaking on the projects, he stated that they would be focused on marketplaces for tokenized assets, sped up transactions, and diversified collateral assets. He also revealed that one of the projects will focus on the US fund complex, while another will focus on Europe's debt issuance. Goldman Sachs' move reflects the growing institutional interest in tokenizing real-world assets. The trend has seen significant adoption, exemplified by BlackRock's Biddle Fund, which surpassed $500 million in assets under management in less than 6 months, despite the broader market challenges. BlackRock's Larry Fink may be one of the biggest bulls on RWAs, saying this:
"We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we can customize strategies through tokenization that fits every individual."
TIA, the native token of the modular blockchain network Celestia, has surged 20% and is a top gainer among cryptocurrencies today. However, Celestia is still down more than 65% from its all-time high of $20.91, which it reached on February 10th. The modular blockchain debuted on October 31st, 2023, welcoming 580,000 users eligible for its airdrop. Celestia stands apart from traditional monolithic blockchains by employing data availability sampling, or DAS, rather than executing through consensus. This approach not only scales the network, but also alleviates settlement constraints. Celestia's latest surge in price comes as market expert and technical analyst DeFi Squared in a July 9th X post shed light on the uptrend of Celestia, attributing its standout performance in a generally stagnant crypto market to its role as a blockchain infrastructure enabling real and useful activity. The analyst pointed out that a large chunk of data on Celestia originates from the Orderly network, which offers permissionless liquidity to on-chain perpetual markets, a sector with robust and growing demand. This network processes a substantial volume, often surpassing 500 million daily trades. DeFi Squared emphasized the necessity of a data availability layer like Celestia, which supports secure, permissionless liquidity for these markets, suggesting a solid market foundation for the blockchain. DeFi Squared also noted that despite attempts by traders to short the upward trend and negative funding rates on perpetual trades, indicators of a potential market bottom are fostering optimism. The analyst further noted that insiders are currently unable to sell their shares due to a vesting period that extends for over 100 days, contributing to additional market stability. Alex, the native token of the Bitcoin Layer 2 bridge Alex Lab, emerges as the top gainer among the largest 500 crypto assets over the past 24 hours. This remarkable uptrend comes on the back of the broader crypto market recovery by Bitcoin and the altcoin market. Despite the sustained sell-offs from the German government, Bitcoin rebounded on July 9th, coinciding with a similar increase in Alex's price. However, while the flagship crypto asset witnessed a correction on July 10th, Alex maintained its bullish trajectory. The token spiked 21.5% yesterday, further building on the momentum to register a 57% increase this morning. Remarkably, Alex has increased 108% since Monday, leveraging the renewed market-wide strength to breach the key resistance levels. This bullish momentum comes 2 months after Alex Labs suffered a $4.3 million hack, an attack it attributed to the Lazarus Group. The Alex token tumbled 28% following the incident. While the event impacted investor sentiment, confidence in the protocol has since returned, recently evident by the latest demand around its native token. Launched in 2021, Alex Labs is a Layer 2 Bitcoin DeFi protocol running on stacked smart contracts. The protocol provides a launchpad, a decentralized exchange, and a lending and borrowing market. And just yesterday, they announced Runes Bridge is expected to go live early next week. The reopening of the Runes Bridge will improve trading and IDO processes, facilitate smooth token transfers and trading activities, and boost the growth and adoption of Runes within the Alex ecosystem. And now you can buy, sell, and trade Alex on CoinEx. CoinEx is one of the best exchanges you haven't heard of. Like Gate.io or Mexi, they offer a lot of coins. More importantly, they offer the high-quality coins you want. CoinEx also has a great new offer out there for new users. Sign up today, complete the 4 tasks, and earn up to $100 USDT added to your account. Check out CoinEx with the link down below. The SSV-powered distributed validators in the new Simple DVT software module have officially been deployed and are ready for deposits. SSV Network Distributed Validator Technology, or DVT, among others, will be used by cluster participants to run the DVs associated with Lido, the liquid staking middleware solution for Ethereum. SSV Network creates easy-to-use and scalable infrastructure for developers, and SSV is powered by DVT technology, a pioneering architectural framework designed specifically for Ethereum staking. This simple DVT module is designed to diversify the node operator set connected to and utilizing the Lido protocol while benefiting from the technology's ability to increase resilience, distribution, and security. The module also paves the way for a more scalable and permissionless DVT-based module in the future. The technology will drastically increase the number of participating node operators using the Lido middleware, helping increase client diversity, enhancing fault tolerance, and potentially reducing bond requirements in the future. DVT is becoming increasingly crucial in decentralizing ETH staking and making the entire network less susceptible to attacks. Since its permissionless launch in December, the protocol and its 700+ node operators are now celebrating securing over 1 million ETH. This amount is set to increase as the simple DVT module goes live in tandem with the many builders in its ecosystem.